All right, greetings traders. Sam here from TradeDevils.com and TradeDevilsIndicators.com. Today we're looking at the ATR-based median Renko bar. This is the latest in our suite of tools designed to help the Renko bar trader. And it really is designed to address the very first question the Renko bar trader has to ask himself, regardless of what market he's trading, and that is, what's the appropriate brick size for the market? Well, if you're familiar with some of our other tools, you know that we have addressed this through an ATR-based Renko brick size calculator that, if you've not seen that video, would be worth watching. And with that tool, what we're doing is looking at a short-term, a medium-term, and a long-term ATR range, and then letting the algorithm in the software make suggestions based on the current volatility and giving you three choices. So based on your comfort level, your risk tolerance, what you like to trade, we're giving you a small, a medium, and a large brick size suggestion tied to the current volatility. Well, that is one way to solve the problem, and it can be very effective. It does require that you're monitoring throughout the course of the day for changes in the volatility, which in turn will affect the choice of brick size that you would want to use. So while that is one solution to it, again, it does require that you stay on top of that. And if you're trading multiple markets, it would be easy to miss one. While they can be set to trigger an alert, if you're trying to trade 4, 5, 6 markets throughout the course of the day, that can require a lot of changing. So it may or may not be the appropriate solution for you. The ATR-based median Renko bar that you're looking at here is making all those calculations automatically. So let me show you what we've done with this and what that looks like. So first, let's just take a look here. I've got the September YM chart up here. I do have the ATR brick size loaded up here. The bricks are loaded on the chart here. And I'm recording this on Saturday. You'll note down here, Saturday the 19th of June. And as I always do, I just use the most recent couple of days of data. There's never any need to cherry pick data. Just use what's happened the last couple of days. And then also, I will always put our initial balance indicator on the chart just to frame the day so we can get the full RTH session. All right, we can see it here. If you were trading this week, you know there's a lot of volatility in the stock indexes and a big sell-off at the end of the day. But I like to get a sense of context for the day. And then I've got our toolbar up here because I'm going to use some of these as we walk through some of the features here. Well, so right off the bat, you'll notice that the bars, they look a little bit funny because what's happening is we're adjusting the bar size automatically to changes in that volatility. So if we go in and we look at the settings, or in your data series here, you'll note here's the ATR mean Renko bar. Now we're approximating here. This is a 1 minute ATR and a 14 period. These can be changed to whatever you like. This is the default. We find this very adequate. So we're approximating, just as we're doing with the brick size calculator. We're approximating the 1 minute chart, and then we're tracking the last 14 periods. Now, one additional feature here that's worth noting is that you can also use tick replay here. So if you had a particular application that required tick replay, that's a nice little feature here that's not commonly found in other types of Renko bars. So just to draw your attention to that, that was kind of something we wanted to offer here. Again, you might be looking at, perhaps you're looking at a footprint chart on a Renko bar. So or some application that required tick replay. Very nice to be able to have that. Okay, so that you understand that. Now, so you'll look here, and of course you'll note here, this would not be surprising at the open of all the stock indexes, that we have increased volatility. So note what's happening to the brick size. Here we're going from these small, relatively tame brick sizes here, just the kind of thing you like. Just these, of course, the Renko trader. This is the smooth kind of price action that you're looking for here. We like that, the consistent brick sizes. But when we have very high volatility, this indicator is really doing a couple of things for you. The very first thing it's doing is when you see this kind of extreme range of bars, you'd know that this would be a challenging area to be trading with Renko, because the bricks can be changing. And well, if you just look here, right? So this brick here, that's an 86 brick or 86 tick brick. Now that's likely more than the risk tolerance of anyone watching this video. So that being said, you can just look at this whole range here on the way down. Very difficult to trade. Well, that'd be difficult to trade no matter what you were looking at. In fact, I've got it over here on a 1 minute. So you just see, I mean, there's just no trend here. It's just, this is just chop, right? So this is the kind of thing you want to stay out of. And even here, you look, okay, that's straight down on those 3 minutes here to put in this pivot, which this ends up being our IB low. That would be right here. But again, the size of that brick is going to be problematic. I mean, there's a 38 tick brick right there. Right? Again, that's likely more than the stop placement that a Renko bar trader, if you're trying to day trade, it wouldn't matter what the market is. That's a pretty good size of risk. So if you're in a 2 or a 3 lot here and you're trying to trail on the pivot highs, that's going to be expensive stop if you get tagged there. Now once the brick size starts to calm down, well then it's much more tradable. Here you see, here we go from these massive 80 plus tick bricks to down here. Now we've got reduction in volatility. We've got there's a 6 tick brick. All right, so from 86 to 6. So note that's happening all now automatically. So rather than constantly monitoring, which here, well, we'll look at it in a second, but rather than constantly monitoring what the brick size is and what's appropriate for your trading style, your risk tolerance, this is all happening behind the scenes. So so you'll note here as we fall down, you'll recall the big drop, the huge spike of volatility. Well, that's right at 4 o'clock, right? So again, end of the day, that's not surprising to see that spike in volatility, but I think this is the more powerful thing to note here, because this is just screaming at you, this is a bad time to be trading. Now, once we start to normalize here and the volatility dies down, then it becomes much more accommodating. Same thing if you're looking at the overnight here. I mean, these are great here, and it takes a little getting used to as you go from this size brick to ultimately this size brick, and then the kickback here is pretty substantial. So they look a little odd to your eye when you first bring them up because of the fact that brick is expanding or contracting based on what the market's doing. So, if you kind of get it here, we'll go back here. So here you can see some pretty extreme volatility here as we go straight up and then straight down, going back to Thursday where we had, I mean, obviously we had lots of volatility. If you were trading this week, it was just absolutely crazy volatility. So straight, I mean, what a the market has just been amazing. We talk about a V recovery, right? Just amazing, right? Just all the way down, all the way back, right? So this kind of volatility can be very challenging to trade. There it is again. You've got one of these massive bricks here. There's a 40 tick bar. So if you're trailing this, or if you're in this and you got a 40 tick kickback here, likely, if you're trailing with a stop, that's going to be problematic for you. It may take you out early. And a market ends up ultimately going all the way back to where it started from. So these can be very effective here, and the beauty of it is that you don't have to fuss with it, right? So you can just set it up on the chart here. So you see here, I just keep it as a 114, and then it's going to make the appropriate change to the brick size automatically throughout the course of the day. So if I see this also would be problematic for the Renko trader where we have just complete lack of trend. When I see trend, I want to see trend happening, but I don't want massive bricks, because that's where the Renko trader has real problems because of the size of these kickbacks. You get stopped out intrabar, and ultimately the market just keeps going. So, the illusion of Renko is that it's so easy after the fact. You look at it and you say, well, okay, what's hard here? I sell it when it's red, I buy it when it's green. Sell it when it's red. Here, a little retrace, just what you want, but something like that can be problematic for you. So it's a nice note here as we go into the overnight. Very, very tiny bricks. Then right, it starts to heat up as we go into the day. Now here we're coming up on 7 a.m. This can be decent trading in here, but you'll note, right, if I can get them up here, how big the bricks are. We go small, 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 small. We open, and now we've got all this increased volatility. So it's doing a couple of things for you. It's alerting you to conditions that you may not be an area that you would want to trade, or if you're trading it, perhaps you wouldn't want to be trying to approach this with Renko bars because of that volatility. And then it's giving you very clear evidence as to when the market is much more tradable. So if you're in something like this, if you caught that short and you see the bars expanding, if it's going your direction, that can be a positive. But I warn you that when this is happening, this can be very, because you don't know, right? I mean, you're right there. Oh, are we going up now? Are we going up? Right? Always easy with, well, trading is always easy after the fact. But here, what is that, a retest? Are we going down to test the low? Is that something you want to buy? Is this a test? Right? What are we doing? Right? Again, the increase in volatility can be something to alert you that you might stand by and wait for better conditions. Now, to give you a visual representation of that, let me. Oh, there's the 1 minute. So here it is. I've just added a couple things to the chart to try and help you see this. So I have two things on the chart now. So here it's just the ATR. So this is a visual representation of what's happening behind the scenes. So it's a 14 period on a 1 minute ATR. So and then the other thing I have here is this is our trailing stop, which uses the ATR. So this is a 14 period ATR for the stop, but it's 2 times the ATR. So you'll note here, let's see, if we were here, the trip back to the stop is 90 ticks. Well, here we're looking at the ATR. It's about 45, right? So it makes sense, right? You can see 2 times the ATR. So it's giving you that visual representation, and this can be useful. And I think this is something that traders don't pay attention to, where we can see the dramatic increase in volatility coming from the open. I mean, that's from 9:30 to approximately 10 o'clock. The dramatic increase in the ATR, in the volatility through the open. Now, once the ATR is coming down, the trading conditions become much more friendly. And then something like this, where we're at 2 times the ATR. Note how it gets closer and closer because the volatility is falling off. Right, now we get here where we have very low volatility, but we just have lack of trend. So thus the stop dots are just going back and forth. So this also can be a problem area for the Renko trader. There's just a lack of trend. Well, now we see the ATR is falling harder and harder and harder. So while the risk is lower, we also see that the potential for trend expansion here is starting to be limited. So ideally, the idea, if you're tracking the ATR, is here we want to try and get into the market when the ATR is lower and then ride it through expansion, but be mindful of the fact that as the ATR starts rallying up here and we're heading towards 17, 18, and now right, compare that to where we were at 45, 17, 18, this can be a range that's friendly, but as we start going up here, now we're up to 24. Right, so here, if you were trailing with a stop here that was, if I can bring this up, that was 2 times the ATR, it would have tagged you here. Right, so that spike here. If you often you'll see Renko traders here, particularly using our ATR stops, they'll attach the stop to the trailing ATR stop, and then here you'd have been tagged even though you were 2 times the ATR. Looks like you had plenty of room here, but once we get to this pivot here, right, they tag it. Right, again, I know that's 4 o'clock, but you get the idea here throughout the course of the day. So this can be a nice way to kind of monitor when the trading conditions are friendly and when they're less friendly. Let me go back a day here, or even in the overnight. And so what can be a good idea if you are tracking the ATR through the course of the day, you can put it on a market analyzer and look for conditions where it's either very low or very high. The other thing that can be worthwhile is to just use a horizontal line. Say, okay, well, when I get above 40, let's get it back there. There's come on, 40. There we go. When I get above 40, hey, this may not be a time that I want to be looking to enter the market. Or if I'm in the market, it may be a time that I want to tighten up some of my exposure. As it starts to fall, there can be a point where, same kind of thing, you could put a point down at the low. When it gets this low, what you're concerned about is just a lack of trend, where you're just chopping, right? And you'll see it often reflected in the stops, because you'll be going red, blue, red, blue, red, blue. You have a lack of trend. Much like here. So you see this as we just looked at this here, we just have chop, a double top. It's this noon in New York, right? So market can kind of slow down here, and we see the ATRs falling off, getting lower and lower and lower. So just a suggestion, right? But more importantly, I'm just trying to give you the visual clues here as to what's happening. Very high volatility here, very high brick sizes. As the volatility is retracing and declining here, the trading gets much more friendly. And then these sustained moves like this, where if you here, do something like this. So if you took the break of that low here, so we get a little structure. So we get a double top here. Now we get a swing. Now we failed to make the new high. So here, this might be a reasonable entry here. So a failure to push up and go get a new high here. Market rolls over. So that kind of a trade. I mean, that's not a bad little trade right there. So there's 41 ticks on that as the volatility is declining. Friendly trading. Right now, it's a little bit of increase here, but here's the same phenomenon again. So we get swing, we get this pivot here, retrace. We don't get a lower low, right? So same kind of thing. This can be a nice way to approach the market. So we get with the failure to get the new low here, it sets up the potential for a reversal in that structure. So we have a low, we have a lower high, we get a swing. This is, I mean, if you were looking at that on a smaller time frame, that would look like that would just be much like this. We'd have a swing. We'd have, again, another lower high swing. Now here, potentially, we get a reversal. Now I don't get the lower high. We take off. So, maybe you're taking something like that. There's another 28 ticks to get back up here. And then the same thing, because that's how the market trades, right? We swing. We don't get a new high. We get a lower high. Here's the last low, and then we break it, and we get a lower low. It's just that constant back and forth in the market. But notice what's happening to the volatility. Brick sizes are consistent. Volatility is low. This is very tradable. Right? Volatility starts to increase here. Now look what I get. All right, look at this. All right, now I've got, there's a 31 tick bar because look at the volatility, right? We're up to 15. So it can be a good way to keep an eye on it. And most people just don't track it, right? But my suggestion is, if you want to pay attention to this, which I would suggest, put it in your market analyzer so you can see where the ATR is, where that 14-period ATR is, and that may be something that would cause you to go look at a particular market as the ATR is either too high or too low. Right, so if it's friendly, and that comes from a little bit of experience and having some time behind the screen to get familiar with your market. So the volatility range for the YM is going to be different than the NQ or to crude or gold or whatever you may be trading. So it takes a little time for you to get a feel for when the conditions are friendly. If you're just looking at the ATR, if you're using the auto adjusting ATR median Renko bars here, it's all happening automatically. So you can just get a visual representation of it here. Now, used in conjunction with the ATR and our ATR stop here, you're getting a very clear visual read on when the conditions are friendly and when they're unfriendly. Okay, in closing, I will just remind you that all of our indicators, including bar types, are available for a 5-day trial. Very easy to do. And of course, if you might be watching this on the very page here that I'm going to put in front of you, you might be watching this on YouTube. But if you are on YouTube, TradeDevils-indicators.com. I'll bring you over here. Here's the 5-day free trial. Well, here's the ATR-based median Renko bricks and some more text and content here if you wanted to review anything or just wanted to kind of look back over things that I went over rather quickly here. But just a reminder here that all of our indicators, and that's all of them, not just one at a time. You get all of them. 5-day trial. And of course, that's 5 trading days, not calendar days. So if you're requesting this on a Saturday or a Sunday, we track it through 5 trading days. So just a reminder there. And you can look at the ATR Renko, the Renko brick size calculator, a number of the tools that we have put together for the Renko trader. I mean, you see it here. I've got the brick size calculator in addition to the auto adjusting ATR median Renko bars. So sometimes I might go back and forth between the two. So if I see that very high volatility and then over here I see, it's suggesting a 33.11, well, I know I don't want to be trading that. But if it starts to get to a point where I'm looking at an 11.3 or even better, maybe a 9.3, well, that's going to look more friendly to me. And upon looking at that, as I see the volatility coming down, I might be inclined to switch to the 9.3. So, for example, if I went to a 9.3 here, and that now I'm going to get smoother lines. And then again, you'll note, let's see, that's kind of the end of the day. Oh, something like this, where you'll note that when the market is trending, this is what we want. That's the move we want. The volatility is going down. When the volatility is very high, we note here we get this kind of chop, right? So the whole point is trying to keep you out of that. Right, you can eat through $500 there in a blink of an eye if you're not careful. Right now, some sort of a reference, some sort of a clue that the volatility may not be friendly here can be very powerful and very important to the Renko trader. So just a few ideas. So you might look at these combinations here. Throw the ATR. That's just the native ATR that's built into Renko or built into to Ninjatrader. I do a little experimenting and find out what's right for you. That's the reason that we're giving you that 5-day trial, and you can look at everything and look at combinations like I've got it here. All right, guys, with that, I'll wish you a good day and good trading.